Hey everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 9th of February 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, well, it's been a pretty good week. The market's marked time this week. We've had some good results come out. We've had some good rallies. We're jumping on lots of momentum moves again, which has been fantastic. How long it lasts, who knows? But for the moment, it's been fairly good. So let's have a look at it. Firstly, have a look at the top 10. What we've got this week in the trend intensity ratings. Altium's jumped back to the top. BLD's had a fantastic rally and kick through. Car sales is doing well. TWE's doing well. The Lottery Corporation's back up at some highs again. So some of those top 10 stocks are looking pretty good, and there's plenty of other good rating stocks in there at the moment for you to have a look at. Okay, so some of our stocks that are doing okay at the moment. Our open positions are up 22% this week, annualised. Top return, Sandfire Resources up 26%. Mineral Resources up 26%, Boral's up 20% in a couple of weeks, Technology One up 24%. So there's some good ones running there and a new one in there. Plenty of other stocks for you to look at. Check out Trading Centre for an update on all our covered stocks on the ASX 200 that we cover. This week in Trading Tactics, where you saw the start of it there, the first slide, profits creating trading consistency. So Mark Douglas talks about the profit gap and why we have the profit gap there. So just want to have a little bit of a look into that in Trading Tactics today as to how we can sort of close that gap there. We'll talk about that. Okay, on the stock pick update at the moment, we're up 9 to 60 of 183 stock picks and ETFs covered, 58 stock picks of 162 covered, and 2 ETFs of 21 covered. We had a new one come in there. Okay, so that's what the stock pick update's looking like, and the portfolio update at the moment. Well, the conservatives have jumped to 5 to 7 out of 20, so it's at 35% equity, 65% cash, so it's improving as well. Our Energizer are both full, 5 and 10 are both full down there, and I've also added in at the bottom there the two portfolios, 5-stock portfolios that I've started recently. One in August 20, which is a 5-stock portfolio, and it's generating 10.6. And the one we started in March 21, 18 months ago, or nearly 2 years ago, in fact now, full at 5, it's generated 8.7. And that's been some pretty tough times in the market, so we're not too unhappy with that at the moment. Okay, so let's get to the markets now. Firstly, the Dow Jones. Okay, well, it's hit its wall and still hasn't moved anywhere for the last couple of weeks, so nothing changes there. It's holding up, it's not being sold off, it's not rallying. Things are reasonably constructive down here. We're above the average, so well, I guess we bias on the positive side, but we do have this wall of resistance to get through yet. The S&P and the Nasdaq, which are coming off lower boundaries, are all looking pretty good. They've marked time for the last week or two. No significant really selling in there, so the market's being okay. It's encouraging, the S&P, as is the Nasdaq, which is trying to find that base above 10,000, and it looks like it's done so for the moment, especially with this very nice volume pushing this higher out of that low. So those overseas markets, there might be a little bit of positive news in there, you never know. While commodities, somebody sat on the commodities this week. Gold has marked time after a bad week last week. It's got it towards that R1 level. And it's made 3 tops there now. Whether this is a top or not, we don't know, but it did shy away pretty quickly on some good volume here. So the gold price may well struggle to move past this 2,000 level. But the trend is still up, the short-term trend is up, so we'll watch it. Like the indices, we're now pushing into a major resistance area to watch. Okay, copper as well, had a bit of a sell-off last week again. It's still formed this reasonable new uptrend here, looking okay, holding up well. We like the volume down here. Bit of selling came through last week, so just to be wary. And this is not an insignificant spot. So again, we've got another wall of resistance to get through to kick that higher. While Brent crude, it's back putting pressure on the downside there. The trend is down for Brent crude. Has been for a while, so we're just following that lower. And this is sort of trying to hold here, but it's certainly not making a excuse me. There's certainly no rallies coming through from there at the moment, so it's certainly struggling a bit. So that is the overseas markets. I did go through the stock picks a minute ago and the portfolios. The ASX 200 is also looking pretty good. You know, it's right up here, right bang on this door here. It's really ready to have a go. The momentum index is bullish here. Volumes have been really reasonably good. I haven't got them on this chart here, but I do know the volumes have been reasonably good, pushing this market into this high here, so that's encouraging as well. All in all, it's a very encouraging picture when I see the bottom down here, this trend up here. All we really need is this 7629 level to go, and we're making new highs, and that's significant. So, and there's still lots of worry out in the market out there, so that's a good thing. Some people are starting to jump on board, which is okay. Okay, so that's the ASX 200. I went to the stock pick update for you. Now, I guess we should get into some stocks. Okay, so last week we looked at a few there, WiseTech, Westpac, Qantas. We looked at BLD last week. We'll have another look at that this week. Interesting situation with BLD, how it has been rising nicely into that profit report, and a couple of other stocks there. So this week I want to start off with a couple of new ones in the top 20. Macquarie Bank. It's had a nice little rally. Again, this is really bringing things back to basic. There's some simplicity of looking at price action, which is so very, very important. Okay, so we've come back here to a long-term support in Macquarie. We found some support here once, twice, thrice, a little rounding bottom here, if you like, or the shift going from the sellers to the buyers. Excuse me. And then we have a rally through this point here, which creates a trend reversal and a breakout. We have volumes coinciding with that, and also the momentum index kicking higher. So that was a really very simple signal. Trend intensity rating +7. And this again is one of those stocks. We talked about the trend intensity last week. When you're looking in that 4 to 6 area, that's often where the big trends can start from. And this trend intensity from Macquarie was about 6 last week. It's now moving into 7, so momentum is gathering. So sometimes looking at those trend reversals when the trend intensity rating isn't that hot yet is often a good spot to start a trend and to get some more momentum out of it. So Macquarie Bank is looking okay. It's fine. R1 is the next target there. Okay, the other one I want to look at is in the big area is Fortescue. The iron ore guys have all been banging on the door, Rio and BHP, but we still, BHP just got through. Rio and Fortescue haven't done so yet. They're more focused totally on iron ore. But so we've really got to rally into this again to another high resistance level sitting on top of us here at the moment, which is stopping everything at the moment. There's not a lot of volume going on here, so not a lot of sort of selling hitting the market. Momentum is still positive. It's above the average. So the trend intensity rating is 0, which is where neutral. We're sort of the jury is out on this one for the moment. It has come from the lower rankings, which means it's likely to move into the higher rankings of trend intensity. So it's certainly worth watching. But that is the real zone R1, and that's the one to watch for Fortescue. Okay, now one of the downtrodden ones, which I probably haven't really covered that much lately. It's not a high yielding stock, I'm pretty sure, but that doesn't matter too much. What we've got here is we've got a 50% correction from its highs here on 0. It's now starting to show some signs of wanting to base here. We've had a low here, it's come down and tested again, hasn't really broken it, but we've seen some good support, been very, very solid for quite a few months there, 4 or 5 months, just holding there, and we're now starting to see a little bit of volume poke its nose through, a little bit of volume there, nothing significant. I can squeeze it up a bit to give you a bit better of an idea. So there is some heavier activity, which is a good sign. So again, it's one of those situations where do you accumulate something like this in your super fund, a good quality stock like Xero, or do you wait for the trend reversal, which is what Stockradar will do. So it's an interesting stock, been well sold off. A 50% correction is always a nice correction. Doesn't mean it's the bottom, but you've got to be close. So that's Xero. Trend intensity rating is still -6 for that one there. Okay, so now we get to, Seek, which is one that came in last week. So this was an up and a down and an accumulation pattern, and now are we going back up again? Well, we're trying to. We've got some good volumes come through. It's broken out above this area here to give us a trend reversal. Momentum is just starting to turn positive, and we're above the average. So the trend intensity rating was 6 as of last week. It will move up towards 8, 9 or 10 next week, no doubt, depending on where it finishes on Friday. And again, it's had a 45% correction, so around here, or even down to here, it might have got to down to $15 even further. That's the area, but it did stop up here just below 20. So that's the area we've got our support in our accumulation package, and hopefully we're moving into that new uptrending cycle for Seek. Okay, so that's Seek. Technology One's another one which has been running pretty well for us. It's been an interesting stock. We had a correction back here, came back to some long-term support, developed a little reversal pattern here, eventually broke out, and we did have a tough few weeks here for a while. Our stop did hold, and we were pretty stubborn on that one, which we had to be. It's about following the process, which I'll talk to you a bit about later on, and not second guessing. And then it did take off, and we did have a bounce right back to the highs, and now it's gone through the highs and kicked higher again. And it's all looking pretty good. There's a bit of two-way volume here, but ultimately the price is going higher, and that's what we want. And momentum and the moving average is certainly bullish, because that's pointing up, and this is also pointing up at the moment. So Technology 1 is still good. Trend intensity rating is +9 on Technology 1. Okay, now we looked at Pro Medicus last week. Some of the health stocks are looking a bit better this week. I see some of them, Cochlear, CSL, had a bit of a rally at some stage. Sonic Healthcare is not looking too good, but this one we did look at, Pro Medicus, as it's making new highs. It marked time a bit this week, but it did come down, but the buys a bit straight back up again. So we're quite happy about this one, especially with what we've got below it. This volume formation, the good momentum, and being above the average. So Pro Medicus looks pretty good, and it's making a new high. Price action is all important, so that's what we need to look at. So Pro Medicus ticks all the right boxes at the moment. Okay, now the next one I want to look at, this is one we looked at a while ago. I think the last time I looked at this we were up in the snow and we were skiing, and I was coming from up there. So this is a while ago. That's going back to obviously August, something like that. And we saw Nanosonics, had a huge rally. Everyone got very excited about it, and we said, just be cautious, things will change, they'll come back. And it did come back a long way, even further than we thought. Then it's rallied again, and we hit this level again, this long-term resistance support, and we've now hit it for the third time here now. But we've got higher lows here, so this is sort of an encouraging picture, which is sort of why I'm showing you today, because it really has gone a long way along the trend reversal path, and it's built some constructive evidence. It's now holding above the average. Volume is starting to look a bit better. Momentum has turned positive. All we really need is that price action trigger, which is a move above R1, which is about $5. So trend intensity rating is still 0. So it's just one for you to watch. Finally, I think we might get some movement there, especially as some of these health stocks start to move again. Okay, one what I covered in the newsletter last week, I talked about new listings and spin-offs and things like that, and they often form a similar type of pattern when they're listed. And Deterra Royalties was fitted in that box because it was very volatile for quite some time. It's a good stock. It yields well. Now it got down to here, 1, 2, 3, 4 lows down here. Now it's a bit about talking about what I was talking about regarding the super fund and the Stockradar strategy. Some of these opportunities at the moment of these downtrodden stocks to add some of these good stocks to your portfolios is a good idea. And even a new stock like the Deterra Royalties, which is good yield, so a good income stock. So if it does break out of this trading range, it will trigger a Stockradar buy, a momentum trade buy. You can always look for these accumulations down here in the low end, which is a smart super fund strategy, but not for me. I wait for the breakout and look for the momentum move. And so for the Deterra Royalties, it's up here testing these highs again. It may or may not get through. There's been a bit of volume. Momentum is up there again. Moving average is pointing up. So, the settings are right. Its trend intensity is +1. It's cocked and ready. It just has to get through there at this stage, and that high is up around 512. Okay, so that's an interesting stock for you to watch, the Deterra Royalties. And the last one we'll go through today is, I always like to have a little bit of a blow of the trumpet, which is Boral. We've made a lot of money on Boral over the last couple of years. We've had this big run up here, and Stokes was buying and buying and buying, and we got out at the top there nicely. And we've watched it come all the way back down again and create a nice little downtrend here. Then we get this accumulation pattern. So we're going from downtrend, distribution, uptrend, down, distribution, downtrend, accumulation, then back to uptrend. That was a mouthful. So this is looking fairly constructive because we've got a good base down here. It's now broken out. It broke out a few weeks ago. Interestingly enough, there's been some very interesting support for the stock going into this great profit report. But obviously some people weren't expecting it because we did see a huge jump this week. So we've got beautiful volume following this. The momentum index is triggered above 0 to crossed above the average. This was a critical area here of evidence. It's now cleared that area. Trend intensity rating is +6. Again, just starting a trend reversal, not maximum momentum yet. So it's probably going to move into that zone. But for this week, the trend intensity rating was 6 as of last Friday. and it'll be better again this week if it finishes up around these levels here. So Boral has been a really good stock, and we look forward to some more gains on there with a bit of luck. Okay, so that's the stocks I wanted to show you today. I hope that's giving you a bit of an idea of what we do. There's a lot more stocks for you to look at in Stockradar that look like this, that there are opportunities across the board at the moment. We have a lot more stock picks and a lot more coming into the stock picks at the moment. Okay, so now I talked about the trend intensity indicator last week. This week I want to talk to you just about something that Mark Douglas talks about, which is the profit gap. And the profit gap is something that occurs where you see these beautiful trading systems that work it out. They be beautifully high, nice equity curve going higher, and you think, okay, all I need to do is replicate that, and I can make that same money. Well, sometimes you might try and do that, but you don't make the same money for lots of reasons. And the reasons might be you might doubt the trade, you might get out a bit early, you might choke under pressure. There are lots of reasons, but following a system and a process is the way to do it. And it's through thick and thin. If your process works, not all markets go one way, not all equity curves go one way. Take the swings and the roundabouts as you go. So the profit gap really is the difference between what a system returns and what you do. And generally what you do is less than what the system returns. And that's part of the reason why, because we don't follow the system properly. So that's really is the biggest thing, and I think you probably all know how it can happen. The best of us can be susceptible to all this sort of stuff. We've got a big profit, whatever it is. I know with what I do, I'm so happy to let profits run because I know profits always exceed on the upside, and I also know big profits are the key to my returns. I have lots of little losses, lots of little profits, but the key is those big trending moves that occur all the time. And if we get into those, then that's how we make a lot of our money. So I always follow those trends, and I wait for my system to tell me to get out. Okay, so that's the profit gap. So why can't we replicate those results? Well, I mentioned that a few of those reasons before. So how can we try and rectify that, which is really what we're talking about today, because we all know these are problems, there are errors that we have. So this is a couple of pointers here I just wanted to look at today. That's something that you can sort of remind yourself of. Consistency is the main problem in closing that profit gap. Consistency in your actions and what you do and how you behave. Consistency in following the process. Okay, so you must focus on the process. You also must trade without fear, with I call it poise, so that you're poised, whether it's bullish or bearish around you, you can sweep those things aside and you can focus on what's in front of you. So to trade without fear and look at what's there is very important. Mental skills, you need to understand your mental skills. The primary one is discipline. There are things like expectations, a lot of other things as well, but discipline is probably the key thing when we're following a process. Now, also negating mental or repeat errors. And so you want to try and negate errors as much as you can. So you certainly don't want to repeat the same error that you've made before, and that can happen quite often. And also mental errors of how you're thinking, you're letting that get involved with your process. You shouldn't do that. So there's a lot of control that needs to occur in that mental aspect. It will avoid random outcomes. So if you don't follow the system, you don't know how it works. So then you will get more random outcomes because you're not being systematic about it at all. So what we try and do is we try and play those probabilities systematically, and if we do that, then that's where we're going to generate our money from. So there's just a few ideas for you to think about when you're trying to close that profit gap. It's not really hard to have a good trading system and to make one work. It's easy to buy and easy to set up a system. The hard part is when you have to trade dollars and you're involved and your thinking's involved, and I speak to people all the time and they always know better than the market, and that's just things we've got to learn. Anyway, that's just a few ideas for you to have a look at. So consistency is about getting your equity curve to go up with only small drawdowns. Now I'll show you what my equity curve looks like over the last 20 years, and you can see clearly the last couple of years have been a struggle city, and that's the way the market has. The market will return to an uptrend, but I might say that what we look down here, if we look down here at the GFC, that at that stage looked a bit like this. Okay, so it's in the scheme of things, and the uptrend that's followed, it's been pretty small. So just to remind yourself a little bit about that. Although this is rather big now, in 10 years' time or 5 years' time, it's going to look a lot smaller when the market's a lot higher. So the equity curve goes up. That's the most important thing. Perfection is not possible. We just do our best and make money. Okay, so that's about all I've got for you today. Just talking about profits and creating trading consistency, which is really important. What's happening at Stockradar? Well, the newsletter came out 2 weeks ago. There's been a few blogs up there. Nothing particular apart from focusing on our trades at the moment, which are going really well. And it's like when the sun shines, we make hay, and that's what we're doing at the moment. So don't doubt yourself. Don't wait around. Get onto it and move into these good trending stocks. That's a bit for me today. The profit gap is real, as is creating consistency. It's really important. Okay, building a war chest of mental attributes by building positive ones and negating negative ones is vital in creating consistency and closing that profit gap. Okay, so you can do it if you work at it. Okay, so stay safe, watch your trends, heed your stops, give me a call if you need any help, and I'll see you all again for next week's Insights. Okay, thanks very much.